The JSE will be contending with a sea of red in global markets on the back of U.S. markets closing lower on Tuesday. Investors are still worried about the U.S. Federal Reserve hiking interest rates in the world's largest economy. Jimmy Moyaha is independent markets analyst joining us now for analysis of the latest market moves. Jimmy, good morning to you. Let's start with the Rand, which seemed upbeat after the release of the second quarter GDP data, but it's trading lower in early trade. What's influencing the trade there?
Morning, Tony. Morning to the viewers. I think the Rand, much like the other markets, are still reeling off of the performance of global markets and the global sentiment. I mean, if you look at other markets, you look at the oil price coming back towards that $90 a barrel mark from that $100 that it stayed above for so long. Gold is back below $1,700 an ounce. The Rand is back towards 17 Rand 40. It's sitting at around 17 Rand 36 at the moment. So I think overall global markets are feeling a bit of a risk-off sentiment at this stage, and emerging markets are going to feel that a lot more. This coupled with the fact that the dollar is showing some renewed strength off the back of the U.S. markets and the U.S. expectation around those interest rates on their side. I mean, from our side, when we got the results yesterday from Stats SA around the GDP numbers not being as positive as we were, it did signal an indication that the strength of the South African economy isn't where we had pegged it to be, and markets, stocks locally have been suffering as well. We've seen that the top 40 is down as well in early trade. We've seen that the all shares down in early trade. So overall, reaction towards yesterday's numbers, but also if you look at global sentiment, that's starting to filter through to markets like the Rand.
Let's quickly touch on company news. Discovery publishing its results for the year, which ended on the 30th of June 2022. How have they fared in the period under review?
They reported very robust results. I mean, they announced a final gross dividend of around 3.80 Rand. Headline earnings per share up some 74%, earnings per share up some 72%, profit up some 70%. Most of their business units are performing exceptionally well and are performing in profit. They even had a reduction in the net loss from their Discovery Bank unit. That improved by about 10%. So overall, very, very strong results. We know that Discovery is hosting a webcast to discuss these results at about 10 o'clock this morning. But overall, very, very positive results. Normalized profits from operations up some 45% as well. Strong set of results from them, and we expect to see that this will continue into the new financial year.
Let's touch on Transnet National Ports Authority, which has received board approval for its 100 billion rand KwaZulu-Natal logistics hub program, which is intended to expand the ports of Durban and Richards Bay. Talk us through those developments.
Absolutely. So the Port Authority has been approved for that expansion, and of course those expansion plans include the liquefied natural gas operations or liquefied natural gas terminal that they wish to open up in the South Dunes precinct. It also gives the room for expansion on the container side of things. So the aim, of course, is to make the Durban, or the Port of Durban, the largest container port this side of Africa, and to see if they can get the Richards Bay port as well to increase by accommodating that liquefied natural gas terminal as well. So the expansion plans as well follow off the back of the Energy Minister's request or plea to have about 3,000 megawatts of gas to power capacity approved procurement in that respect. We know that there has been some resistance in the past from the Richards Bay communities around that, around the sustainability of that and the environmental impact that will have. But overall, I mean, the approval looks to position two of South Africa's key ports as even bigger global players by expanding both in their respective fields.
Let's conclude the conversation with the country Nigeria, which has opted to halt plans for a new telecoms tax. Is that good news for a company like MTN?
Absolutely. I mean, if you look at the telecom space in Nigeria in particular, I mean, there's about 40 different taxes being levied at different government levels within the telecom space. The tax that was set to be imposed would have been in addition to the already existing taxes that are in place there. And a company like MTN has already seen the benefit of that halt. I mean, they're trading up some 3% for the day so far. Nigeria is also under strain at the moment from a revenue-based perspective, and their tax base is sort of under pressure from that perspective, and they were hoping that this would help them unlock additional tax revenue, given that the telecom space generated some $7 billion in revenues in 2021 alone. So this is definitely a dampener on their plans to generate more tax revenue, given that they've tabled a budget that anticipates that about 60% of that budget will be financed through debt, and they're expecting that they'll pay about $14 billion in debt servicing costs in the coming financial year. But obviously for a company like MTN that's been heavily operating in Nigeria as one of its largest African markets, this is good news. We did see that where MTN Ghana had a similar tax imposed, their numbers did drop in terms of revenue from that perspective. So MTN Nigeria would be very grateful at this stage that this has been suspended. They obviously don't want any further taxes to be affecting their businesses adversely at this stage.
Jimmy Moyaha is independent market analyst. Thank you very much for that update.